Are you 62 or older, still carrying a traditional mortgage and concerned about running out of money in retirement? With the power of home equity, financial relief is within reach. A reverse mortgage allows you to access your home's equity as cash and frees you of the burden of a fixed monthly mortgage payment. Don't sacrifice the quality of retirement that you worked hard for. Call me, Diana Rice-Wilkerson, your friendly local loan officer, to schedule a free consultation and request your free information kit.
Welcome to the Home and Finance Show. I'm Janis Bradley with JB Real Estate Consultants and my co-host,
Diana Rice-Wilkerson, loan officer with Fairway Independent Mortgage.
This show is designed to bring you current and credible information about home buying, home selling, refinancing, any kind of lending, new construction, you name it. We try our best to bring you the best that we can. Please give us a call at the numbers that you will see below. And on with the show, Diana Rice-Wilkerson.
Hello.
And we have a wonderful guest today.
We have a 5-star guest today. We typically do have a 5-star guest, but
yes,
you will
we do.
find out later that she actually is one of our faves. Absolutely. So let's welcome Dolores Scisney to the stage, to the show.
Thank you for having me.
She is on stage. We're all about it.
Where's the dancing though?
Thank you so much for having me. Thank you.
Well, Dolores is from Indiana Housing and Community Development Authority, and she has been our friend for many years. And you know that that's our most favorite program, thus the canvas that's in back of us. And Dolores, thank you for joining us today so you can talk about your wonderful program.
Yes, thank you so much. Thank you so much. Very thankful for being here.
Good.
Thank you.
Awesome.
So share with us your title, first of all.
Well, I currently serve as the underwriter, so I will review your package. I also am the servicer or servicer for the agency. So any issues or questions regarding the servicing of a mortgage post-closing will come through me also. I also deal with the financial aspect of IHCDA, that is the down payment assistance that is issued, that is the bond funds that are afforded to our agency to purchase loans and to be the investor of said loans. I deal with the legal aspect, so I tell people I can pretty much talk to you about a loan from the beginning as it relates to your approval for the program all the way up to an unfortunate foreclosure.
Okay. Great.
So they're 5 stars. We have a 5-star lady here. Tell us what IHCDA's mission is, please.
IHCDA's mission is to provide the constituents of Indiana safe and affordable housing.
Okay.
Those options are either by way of rental or, as we are going to talk about today, home ownership.
Because it's a number of things you do. I know we tap into the home ownership, the down payment assistance program, but you guys have a big agency that does a lot.
Yes, as it relates to the rental housing, our agency manages the Section 8 aspect of rental housing. We also do what we refer to as tax credit, which is income-based housing.
Okay.
So that is your rental aspect. Then on our real estate side, borrowers are able to capitalize on home ownership via the Community Action Agency or the CDC in their county.
Okay.
Then of course, there's the home ownership department that can assist with the purchase of a home, single family homes. And then post the closing and or acquisition of a property, IHCDA is also involved with the sustainability of those homes, meaning that we can provide energy assistance.
Good.
That's utility assistance. And like I said, the unfortunate of the foreclosure realm, IHCDA has been made the administrator or is charged with the care of funds to help the borrower cure mortgage delinquencies.
Fantastic.
Can't wait to get into that.
So, like I said, we are there on the purchase side, and then we are also there to help you to sustain or keep you in your home. And that also includes, like I said, with the weatherization program, excuse me, they will help the borrower make their homes more energy efficient, to help their utility costs go down. We used to in days past, but let me say these monies are available. Rehab dollars are now in the charge of, used to be IHCDA, they are now in the charge of Office of Community and Rural Affairs, OCRA.
Okay.
So
Okra.
Okra,
Okay.
Office of Community and Rural Affairs. They are
Okay.
charged with owner-occupied rehab. So that's another area where in which the borrower can stay in their home.
That's fantastic. Now, for those services that you just named, I know for the down payment assistance, the borrower works through the lender for that. For some of the others, does the borrower or the consumer work directly with you guys, or are they always working through a third party?
They will always work through a third party.
Okay.
Because these programs are statewide, there's no way for IHCDA to manage that type of intake. So we partner with the community action agencies, the public housing authorities, or the CDCs,
Okay.
community development corporations, to meet or to access the consumer.
Okay.
Okay.
That consumer will go to that community action agency, public housing authority, CDC, and give that agency their needs.
Okay.
That agency being partnered with IHCDA and the administrator of the federal funds that IHCDA is charged with
Yes.
will do the intake for those services
Yeah.
and provide those services. So those constituents will deal directly with the community action agency, public housing authority. We are just the overseer of those funds.
You guys
for
have the
those.
dough. Y'all have the dough, Ray. So one more question on that, though. So if a consumer is listening to us right now, and let's say you mentioned energy efficient or renovation, and they said, oh, wow, I would be interested in that. Do they call 211?
The best course of action
Yes.
is to call our office, 317-232-7777. When you hear the automated voice come on, hit the pound key.
Okay.
You will advise the receptionist that you are in need of thus and so.
Okay.
You will advise the receptionist of the county where in which you reside.
Okay.
Okay.
The receptionist will go to our list, discern the program that will meet your need,
Okay.
and then advise what community action agency, public housing authority or CDC, administers that program,
Good.
and give them that phone number, that email address, so that they can
Reach out.
and or research. But that is the first step, like I said, and they will deal directly with that agency.
And that number again, please.
317-232-7777. When you hear the automated voice come on, hit the pound key. That puts you to a live person. If the individual does not answer, please leave a message detailing your name, your phone number, the county where in which you reside, the question and or concern that you may have or the help that you need. Please detail that in your voicemail. The receptionist will pass that message to the appropriate department for them to call you back and to give you the information that you need.
Excellent.
To address that need.
That's wonderful. Kudos to you guys.
Absolutely. And, I don't think I knew that much about the CDCs. And I think we've got some time to kind of talk about it and tell everybody what the CDC stands for, since that is with the different communities, but how IHCDA helps them and why they would reach out to you.
The CDCs, from my experience, deal primarily with, I'm not gonna say primarily, but I know that in addition to some administrative duties and programs, because each CDC or community action agency can decide what programs they may want to administer, let me say that. CDCs, from my experience, deal more with the construction of which you may paraphrase as the block home developments you see in various areas that are maybe targeted for development, certain areas that may be distressed. You have a CDC that may have gotten some funds to construct homes, to be sold at a reasonable rate, of course, which gets back to the safe, affordable housing as a in our mission. So of course we partner with the CDCs are partner with us if there are funds to help with the construction. Of course, if we can, we will. And then, like I said, that is our partnership. Like I said, each CDC or community action agency, they all deal with different programs as it relates to that sustainability with the homeowner, let me say.
Excellent.
Like I said, CDC is mostly with the construction of homes and stuff. And what I've understood, some of the areas, near the Fall Creek development area, you've probably seen a block of homes and they'll have a nice sign that'll say, this neighborhood organization, thus and so. That's more of your CDC.
Okay.
And that's another way for that home buyer to access safe and affordable homes. These are homes that are, built by the CDCs, of course, constructed, approved, inspected, and then they sell those homes for reasonable rates. And like I said, and they sometimes even try to offer them down payment assistance to go with.
Okay.
Right.
Yeah.
So, and here lately, we've been having some of the community action agencies and CDCs come to some of our conferences to advise them that if your borrower has, fortunately, is incomed out or their income goes beyond what your limits suggest, then please send them to the home ownership department, because then we can assist them with that down payment assistance need, and they can still buy that home.
That's
Sounds
excellent.
good.
That's excellent.
Let's get to these down payment assistance programs.
So talk to us, first of all, because we don't want to overwhelm our viewers. Talk to us about your most popular first-time homebuyer program.
So our most popular and currently our one and only down payment assistance program for the first-time homebuyer is our First Place program. The First Place program can provide the borrower 6%. And that's a calculation that is 6% times the purchase price of the home.
Yes.
Those monies can be used for your down payment assistance needs and or closing costs.
Yes.
And those monies, like I said, it's a good deal. Generally with the First Place program,
Yes.
When I look at the closing disclosures, most borrowers just pay the $100 reservation fee for our program, and I've seen them come out of pocket for the $500 appraisal, and
Yes.
generally they get the money back. So
Yes.
it's a wonderful program to enable the borrower to walk into a home or the home buying experience with little or nothing down.
And so I have a question for you. It may be on the list, but also I know one of the things that's often misunderstood about the program, or I get this question, Diana, do I have to live in a certain zip code? Do I have to live in a certain community? And they have in their minds that these monies are only for borrowers that are living in certain communities, maybe more like distressed areas.
No, that is not true. I get that question also.
Yeah.
So IHCDA programs are statewide. They are not dedicated to any county or zip code.
Right.
Now, I have to interject as it relates to the first-time home buyer classification. 3 ways to be classified as a first-time home buyer. 1, you've never purchased a home before.
Okay.
2nd, you have not been on title for 3 years or more. Minimum 3 years or more. Thirdly, and kind of getting back to that zip code and or tracts and or targeted counties and or targeted census tracts. If you purchase a property in a targeted county or a targeted census tract, you can be deemed a first-time home buyer, even though you've purchased a property in years past.
Interesting.
Because you're buying a home in a
You
county.
never told me that.
And Marion County definitely has targeted tracts.
She's
for sure.
got jokes, guys. She's got jokes.
Yes, that is true for Marion County. So that is another way to receive that benefit. And with that being said, no, it is a statewide program.
Another question I want to ask you is about the income limits, because that's the other thing. And we do know, I remember years ago, I always heard, Diana, there's assistance out there for the low income borrower, but that middle income borrower, there's no assistance.
Yes.
And we have it tough too,
Yes.
Because
Yes.
we all know the more money you make, probably the more money you utilize,
That's right.
okay? So talk to us about the income limits that a borrower is subject to in order to access your programs.
In retrospect to your comment, in years past, IHCDA's income limits were tailored towards federal limits and or federal Section 8 limits. Okay, so yes, we were an agency that dealt with lower to moderate income constituents. Going forward, like as you say, you leave out a demographic that really needs the assistance also.
That's right.
So we have made adjustments to our income limits. We are using federal limits, but we are using the limit.
Yeah.
Wow.
The limit.
Yes.
And those limits allow or enable that middle income family to capitalize on down payment assistance that they would have not been able to do so in the past.
So, but Dolores, now I'm the customer now, okay? No, but can my house, today in today's market, you need to be spending at least $200, $250, maybe $300,
Yes.
$350 for the house that, you may want to live in. Does your program permit a home priced around $300, $350?
Yes. Recent FHA income and or acquisition limits is what you're referencing.
Okay.
As I tell the constituent, the most you can spend when you buy the house, I'm seeing them up to $500,000. And the government had to make that adjustment because home prices have gone up so.
Gone up
Right.
so.
That's right.
So
Yes.
as of June, we got a new increase, and especially in that acquisition realm.
Yes.
Because
Probably
home
over
prices have
100.
gone up.
I think over 100,000.
Yes.
It was like 331.
Yes,
Four
yes,
something.
it's four something.
Or five something
five
if you're
something.
in one of the
Yes,
targeted
yes,
neighborhoods.
Yes, yes.
This is why we do the show.
Yes.
We've got to get this word out.
Yes.
No doubt
And as far
about
as
it.
income goes, just so you know, because I know people are still out there wondering, for a household of one or two, I think it's like right around 94 to 98.
90, I think 94, 1, I believe,
and
something like
three
that
or
for a
more.
1 to 2 person
One or two
household.
person. And then three or more, it's 111 or 114.
And that's non-designated tract. So if you were to purchase a property in a designated tract, or,
Yes.
you know, in the instance of Marion County, the income limit goes up.
Right. This is why we love IHCDA.
Exactly.
Yeah. So, yeah.
And I'm laughing real quickly. Just because we had a situation like that with my customer, and we wrote the purchase agreement, and they were over the limit, but it was a census tract. Oh my gosh, life is so
But
beautiful.
because of Diana
Yes, because
Rice-Wilkerson,
of Diana. That's what I'm
I said, I'm
saying.
looking at this street. I think there's a possibility. Check
That
the
we
track.
can make this
Janis,
happen. Yes.
you just could see her little smile. Yeah, and the borrowers just
Yes.
slipped
Yeah, because they
their
were just
lid.
like family.
Yes,
You know?
yes, yes.
And of course, real quickly, we're sharing with you how important this is because of the market and the low inventory. We still are having somewhat what we call bidding wars. So my point is that you don't have to worry about in this day and age about asking the seller necessarily pay any of your closing costs, because this type of help has really helped us being able to just be in the race with everybody else,
Yes.
with
Yeah.
you know,
Yes.
with this market. So I love IHCDA.
Great point. And most of the time at the closing table, just as Dolores said, you're either getting money back or maybe, I'm going to say this, the most I've had a person have to put into the deal, and normally we're talking about the lower priced homes versus the higher price, maybe the most I've had them put into a deal is $2,500, and they've already paid that in earnest money.
Okay.
So it's like they're not bringing any money to
Yes.
closing in most cases, and oftentimes, like you said, they're getting money back.
Yeah,
So
anything you put in, you'll
I
get
just
back.
want to say kudos to IHCDA
Exactly.
for doing two things.
Reacting to the market.
Well, and the other thing that you guys did, because of course we've been dealing with this program forever, you used to run out of money. And the way the program is designed now with this self-sustaining approach where the money goes back into the pool, so there's always money to help someone, just very forward thinking. So, you know, we're not in a situation where the borrower's under stress because the money's over at the end of July. You know what I mean?
Yes, that's right.
Yeah, we're not in
Yes.
that situation, so
Okay.
kudos.
Yeah,
Yeah.
Throughout my tenure, let me say 18 years, I've never seen the agency, quote unquote, run out of money.
Yeah.
Okay.
Like I said, we dealt with lower to moderate income borrowers where in which some viewers may have been priced out, you know, as relates to their income. But with that being said,
Yeah.
the issue generally would probably be with federal funding.
Yeah.
And, you know, our wonderful, you know,
Yes.
our officials and or
Yes.
the, you know, expeditious disbursement of the funds to the various HFAs.
Yeah.
So to get away from that,
Yes.
we have created to the two programs, like I said, the First Place program and our Next Home program, self-sustaining. We've been able to make calculations in which we're able to provide the down payment assistance and not rely on that federal money.
Yes.
So that enables the programs to continue to keep going.
And you know, when I talk to my customers and I say, now, hey, this is down payment assistance, this is the way it works. If you sell or refinance during the first 9 years, you have to repay the loan back into the pool so someone else can help it. They're all with that. It's almost like, so I'm helping somebody. It's like, what do they call it? Pay it forward type of thing. It's kind of like somebody did for me, and I get to now do that for somebody. And the main thing is I've got my house.
Yes,
Yeah.
yes. Like I said, and it helps us to be able to satisfy our bondholders because that DPA is classified as an expense until.
Okay.
Okay.
You know, either we recoup that money by way of the interest rate or
Yes.
by way of the repayment of the dollars. So that makes our bondholders happy.
Yes.
And it makes our constituents happy.
Good.
And ICDA has been able to, like I said, provide that assistance. And let me say, with that assistance, I know one of the things we were going to talk about was the down payment assistance and or the 6%, that it comes with a 9-year forgivable lien. And this is what I refer to as a silent second that only begins to speak loudly if the borrower refinances, sells, or acquires a home equity line of credit.
I see.
The 6% also has a residency requirement.
Right.
Because this is a bond loan and it is actually investor owned by IHCDA.
Okay.
We as a housing authority have a responsibility.
Yes.
So definitely not our mission to provide down payment assistance for a property that inevitably turns into a investment property to make money.
Rental.
Right.
That is not our mission.
That's right.
So the residency is a requirement for the duration of the mortgage. What I tell people, if you want to get out from under that requirement, and this is post the 9-year forgivable piece, because that 9 years is truly in conjunction with the forgiveness of the down payment assistance.
Right.
It does not relieve you of the responsibility of living in the property as your primary residence.
Right.
To relieve yourself of that responsibility, that borrower needs to refinance, go to another mortgage company, which is fine. You know, that's fine.
And I can help you with that. and that does happen. That does happen where people are like, hey, I've outgrown my home, but I really don't want to sell it. So it's like, okay, you got to refinance into a traditional loan.
Absolutely.
And do your thing.
Absolutely.
And they're perfectly okay with that.
Yes.
The other thing I do emphasize, especially with my clients, is the 9-year forgivable period is not a requirement for you to live in the house for 9 years. And oftentimes, certainly when people are shopping around, you know, I love this thing about borrowers should shop around. And on the surface, that sounds really good, but most borrowers are not equipped to understand even what sometimes we say, and especially in the area of down payment assistance, because you guys give so much. But the other thing, what I do share with my borrowers, though, when it comes to that, is the 9 years is strictly about forgiving the debt.
Yes.
Exactly.
You can close today and sell in 6 months if you want to. We're strictly talking about forgiving the debt. It doesn't mean you have to stay in place for 9 years. So it's like, oh, okay, Diana, thank you. Oh, thank you for that.
And that's what that rider says.
Yes.
That
Exactly.
you commit to living in the home as your primary residence.
Yes, awesome.
So, which is our goal, of course.
Good.
Well,
go ahead.
we're kind of winding up, aren't we?
We've got a few minutes.
6 minutes? Oh, that's a long time. Absolutely. I'm reading in 6 seconds. Okay. All righty. So, let's see, Diana, were you getting ready to talk about something?
Yeah, we want to talk about approval requirements. So can you share real quickly with us?
The approval process to access IHCDA funds, we ask the constituent one to, of course, visit one of our participating lenders. The lender will credit approve you for a mortgage based on IHCDA's minimum guidelines of a 640 credit score. And we also ask, with that 640 credit score, that you have a debt-to-income ratio that does not exceed 45%. Upon approval of a mortgage, because the goal is to truly get you approved for a mortgage that is able to be insured by the federal government. And this is insurance that goes beyond the MI or PMI that you would get for the home itself. This is for the mortgage. The loan has to be able to be insured. Once that loan has been approved, that lender will solicit IHCDA for the down payment assistance and or program that the constituent chose.
Yes.
And that lender will take care of everything going forward. They will communicate with our office to get the down payment to the title company. And that borrower, we ask that borrower to, of course, provide 3 years tax returns and be able to prove your income. The lender should be able to take everything, they'll take care of everything else from that point, truly.
Yes. Yep, it's very simple now.
Before
we had to send files, now, you know, we've been around for a long time.
Yeah.
So before we had to physically send files. Paper files. So we can close one of these loans, you guys, in 25 to 30 days. It's business as usual. And you, again, I love the fact you listen to your constituents and you responded, you know, because
in the nick of time.
In the nick of time, because the marketplace can be a little bit of a crazy place. One of the programs I want you to talk about is the mortgage credit certificate, because we have about 4 minutes, and I certainly want to get that in.
Exactly.
Okay, just real quickly, mortgage credit certificate is a federally sponsored program. This program is it is a certificate that is sponsored by the IRS, Internal Revenue Service. The certificate will afford the borrower a tax credit. I believe it is item number 8396 on your 1040 tax return. I know that just because I look at it so many times.
Yes.
Anyway, the mortgage credit certificate affords the borrower tax credit 25% to be taken on their taxes for the life of the loan.
Can't get any better.
And even if that borrower were to refinance out of the IHCDA product, because this MCC product can be coupled with, real quick, the next home product. Next home product can be used for the first-time home buyer or the repeat buyer.
Okay.
Next home affords a borrower 3.5% in down payment assistance, 3-year forgivable lien. Okay, residency requirement expires after that 3 years, unlike the first place.
Okay.
With the mortgage credit certificate, you can couple the mortgage credit certificate with the next home product. What I tell people is that doing so provides a double benefit. You're going to get the DPA, on the front end at the title company. You layer the MCC, the mortgage credit certificate, with that down payment assistance. Down payment assistance at closing. Then you have a credit that you will be able to file for the next 30 years.
Yes.
And I believe it goes up to $2,000. So I tell people, you look at a down payment assistance amount plus the potential of $60,000.
Yes.
So
It's real, you guys.
you can't go wrong. So you can't go wrong. So quickly.
Like peanut butter and jelly, or chocolate. Let's say chocolate.
I know we only have a couple of minutes. I want you to give out your phone number again, or the agency's phone number, whichever one, especially if someone has some questions about anything that was discussed today.
Okay. You can reach our office, 317-234. I'm sorry, that is my phone number.
Yes, I do.
317-234-3706. I will take phone calls. 317-234-3706. If you're calling our office, 317-232-7777. If you want to speak with me specifically, again, you will hit the pound key, advise the receptionist you want to speak with Dolores Scisney. She will send you to my phone directly. Or again, call me directly, 317-234-3706. More than happy to explain our program to you and advise you accordingly. Thank you.
All righty. I don't know what we can do in 1 minute.
All I know is we want to thank you. We want to thank you
back.
And the
Because
family,
of the
IHCDA
things
family.
that you guys do.
Thank you. No, thank you. Thank you so much.
And that MCC, the other thing that needs to be known and understood is that truly is real money.
Yes.
And we will get back to talking specifically
and what
about
Diana
that.
does, the client doesn't even know it. She gives it to them whether they know it or not.
That's right.
You know, so
You're
it's
helping them.
fantastic. Thank
you so much. Thank you.
Come back again.
Thank you so much.
Have a
Have a great afternoon.
Thank you for joining us. Bye-bye.
Bye-bye.
I am Janis Bradley with JB Real Estate Consultants and co-host of the Home and Finance Show. Buyers, here's how I can help you receive your keys. I am skilled in negotiating and being your advocate, helping you to find wealth building by buying a home. Sellers, when listing your home, I will price your home accordingly to the market, negotiate the best terms, and coordinate the entire process until the sold sign is in your yard. Call me today.